Hi, I'm Eric Schlein from Larchmont, New York. My question is directed to Mr. Buffett. Mr. Buffett, you claim you can do 50% a year. If you had to start over with a small portfolio, would you still be doing buy and hold, buying quality companies at a good price? Or would you be doing arbitrage and really getting down to the nitty-gritty Benjamin Graham cigar butts that you did in the Buffett partnership?
This was in 2007, and Berkshire currently has almost $170 billion in cash. So today, Buffett has even a bigger problem. But now, let's hear what he has to say.
If I were working with a very small sum, and you should all hope I'm not, if I were working with a very small sum, I would be doing almost entirely different things than I do. I mean, your universe expands. I mean, if you're looking, there's thousands and thousands and thousands of times as many options to think about if you're investing $10,000 than if you're investing $100 billion. And obviously, if you have that many, you got all the options you got with $100 billion, except buying entire businesses, and you've got all of these other options. So you can earn very high returns with very small amounts of money, and it will always be such. I don't mean that everybody can do it, but if you know something about values and investments, you will find opportunities with small sums, and it will not be with the portfolio that Berkshire itself owns. We cannot earn phenomenal returns putting $3 billion, $4 billion, $5 billion in a stock. It won't work that way. It won't even come close to working that way. But if Charlie or I were in a position of working with $1 million or $500,000 or $2 million, we would find little things here and there, and it wouldn't always be stocks, where we would earn very high returns on capital. Charlie?
Yeah, but there's no point our thinking about that now.
But he's thinking about it, Charlie.
As you can see from this answer, the reason Buffett is heavily invested in Apple, Bank of America, and other large and mega-cap stocks is because he has no choice but to invest in them. If you have been following my channel, you would know about Monish Pabrai's Research investment. He invested $7 million in the company, while the market cap was around $20 million. Now, the market cap of Research is over $500 million, and Monish could do that because he didn't have the burden of finding an investment that was able to absorb tens of billions of dollars at a time. But before we go any further, let's look at how Buffett answered almost the same question in a different way a year later.
Hi, my name is Timothy Ferris. I am a guest lecturer at Princeton University twice a year. And I'd like to touch on an earlier question about investing with small sums of money. I'd like to ask both of you, if you were 30 years old again and had your first million in the bank, how would you invest it, assuming you're not a full-time investor, you have another full-time job, you can cover your expenses with other savings for about 18 months, no dependents, and it'd be really helpful for my students, for myself and others here, if you could be as specific as possible about asset classes, percentages, whatever you're willing to offer.
As you can see, it is a very similar question. The biggest difference is that this time it is about non-professional investors.
Well, I'll be very simple. Under the conditions you name, I'd probably have it all in a very low-cost index fund, and it'd probably be, might be Vanguard. Somebody I knew was reliable, somebody where the cost was low, and because you postulated that you're not going to become a professional investor, I would recognize the fact that I'm an amateur investor, and I would feel that unless bought during a strong bull market, which this hasn't been, I would feel that that was going to outperform to a degree bonds under current conditions over a long period of time, and then I'd forget it and go back to work. Charlie?
Yeah, it's in the nature of things that you aren't going to have a whole lot of screamingly successful professional investors. You've got a great horde of professionals taking croupiers' profits out of the system, most of them by pretending to be professional investors. And that is in the nature of things too. But if you don't have any rational prospects of being a very skilled professional investor, well, of course you should compromise on some simple thing like an index fund.
Yeah, and that you will not get that advice from anybody because nobody gets paid to give you that advice. And so you will have all kinds of people telling you how much better they can do for you than that, and how if you just give them a wrap fee or give them commissions or whatever it may be, that they will do better, but they won't do better. On average, if 1,000 other people like you do the same thing, that group of 1,000 will do worse if they listen to the people that make pitches at them. And in the end, why should you expect? I mean, you'll get a very perfectly decent return over a 30 or 40-year period by doing what I suggest. And why should you expect more than that when you don't bring anything to the party? The salesman will tell you that you'll get it, but you won't.
I would give you another word of warning. Do not judge stockbrokers generally by the ones you meet at this meeting. We attract some of the most honorable, intelligent stockbrokers in the world. They are not representative of the class.
The politician in him just came out.
I believe that the second answer is crucial to people who don't have the luxury of leisure time that they can spend on investing, or for the people who simply don't like to read any reports or analyze companies. So, for those of us who consider themselves in the first category of investors who choose to pick the companies that they want to invest rather than simply indexing, I believe it is crucial to not limiting ourselves to large and mega cap stocks, because that's what we see on super investors' portfolios. As Buffett said, if he were investing in smaller sums of money, like $1 million, his possible world to invest would be so much bigger, and also the possible companies that you could choose to invest don't have that much coverage around them. So there are much greater mispricings when you look at the companies with much smaller market caps. However, I don't mean to say that you can't find great bargains on the large and mega cap stocks. In fact, most of the time, the risk of permanent capital loss from those companies are much less when you compare them to smaller companies. For example, you could have bought Meta under $100 at the end of 2022, and now, after 1.5 years later, you would have more than 5 times your initial investment. Meta was not a small cap stock that was not covered. In fact, it was a member of the $1 trillion companies. So at the end of the day, there is nothing wrong with indexing. But if you are going to pick individual stocks to invest in, you may be much luckier to look at places with less eyes on them. As Charlie Munger says, the first rule of fishing is fish where the fish are. If you want to know about the companies that I invest in, I covered some of them on my channel, and I will keep doing that in the future. So please make sure to subscribe and hit the bell icon so you won't miss my future videos. That was it for today. I hope you liked it, and I'll see you in the next one.